Could silver really hit $100 an ounce by 2026? It sounds crazy, but today we're going to break down exactly how it could happen. We'll look at expert forecasts, the hidden market trends, and the powerful forces driving silver's price. What we uncover might just change how you think about this precious metal and what it could mean for your wallet. So when you think of silver, what comes to mind? Maybe jewelry, old coins, or a safe haven investment. But the reality is, silver is the engine of the modern world. It's inside your phone, your laptop, and the servers that power the internet. It's a key component in solar panels, electric vehicle batteries, life-saving medical devices, and even water purification systems. Here's the catch. While all of this is happening, most people still see silver as just a shiny metal tucked away in a vault. But behind the scenes, a perfect storm is brewing. Industrial demand for silver is skyrocketing. At the same time, mining supply is struggling to keep up. And on top of that, investors are buying up physical silver at an incredible pace. When these three powerful forces collide, prices don't just move, they can explode. Right now, silver is trading around $87 an ounce, which is already a multi-year high. But that price tag alone doesn't tell the whole story. Let's look at the numbers. In the last 12 months, industrial demand for silver surged by about 6 to 8%. That's a huge jump. Meanwhile, global mining production barely increased. And what about the investment side? Physical silver ETFs have been consistently adding thousands of tons of silver to their holdings. This combination of soaring demand, flat supply, and relentless investment pressure is the classic recipe for a massive price surge. It's the kind of setup that could send silver into uncharted territory, creating a historic run. Some of the most respected analysts in the metals market are incredibly bullish on silver right now. They're not just predicting a small increase, they're talking about a potential move toward $100 by early 2026. Their argument is simple. Industrial demand alone is powerful enough to get it there. Think about the global push for green energy. Solar panel adoption is accelerating faster than anyone predicted. The electric vehicle revolution is in full swing. And the build-out of AI data centers requires massive amounts of new hardware. All of these industries are incredibly silver-intensive. One forecast even suggests that within a few years, the demand from industrial uses could actually exceed the total amount of silver mined annually. If that happens, every single ounce of silver becomes exponentially more valuable. On top of that, these experts point to persistent inflation and central bank policies, which are driving more and more investors toward the safety of precious metals, adding even more fuel to the fire. But let's be balanced, because not everyone is convinced. There are skeptics who warn that $100 for silver is just a fantasy. What's their reasoning? They point to the risk of a global economic slowdown which could cool industrial demand. They also argue that higher interest rates make holding non-yielding assets like silver less attractive. Their core argument is that while the silver market is definitely tight, a price jump of over 50% in just a couple of years is extremely rare. These analysts caution that hype can be a dangerous thing. They remind us that silver can be incredibly volatile. It can spike dramatically, but it can also crash just as quickly. They often point to the 2011 price action, when silver rocketed to nearly $50 an ounce, only to fall back down sharply, leaving many investors with significant losses. Now, here's a crucial piece of the puzzle that most people completely miss. Silver isn't just mined and then sold to investors. The vast majority of it is consumed by industry. And once it's inside a smartphone, a solar panel, or a medical device, it's effectively gone forever. Yes, some silver is recycled, but the process is slow, expensive, and inefficient. This means that a huge portion of the silver used each year is permanently removed from the available supply. To put this into perspective, roughly 30% of all annual silver production goes directly into electronics. That silver is essentially locked away, off the market for decades. When you combine this constant drain on supply with the rapidly growing demand from both industry and investors, you create the perfect conditions for a massive supply squeeze. It's a situation where there simply isn't enough silver to go around. Let's dig a little deeper into the investment demand side, because it's a huge part of this story. We're not just talking about retail investors buying a few coins. We're talking about large-scale institutional buying from ETFs, hedge funds, and private wealth managers. These big players have been accumulating physical silver in record amounts, and they aren't buying it for a quick flip. They're storing it for the long term as a hedge against inflation and economic uncertainty. Every single ounce of silver they buy and lock away is one less ounce available for industrial use. This tightens the supply noose even further. You can almost picture it as a tug of war. On one side, you have the industrial giants who need silver to build the future. On the other side, you have the investors who want to protect their wealth. The rope they're pulling is the limited global silver supply, and neither side is willing to let go. This intense competition is what could ultimately drive the price to astonishing new highs. To really understand what's possible, let's look back at history. The 2011 silver spike is a perfect case study. In just a few months, the price of silver shot up from around $30 to nearly $50 an ounce. What caused it? It was a perfect storm of investment frenzy, strong industrial demand, and widespread economic uncertainty following the 2008 financial crisis. The spike didn't last, but it was a powerful reminder of how quickly silver can move when multiple bullish factors align at the same time. History doesn't repeat itself exactly, but it often rhymes. Many analysts believe that the conditions we're seeing today are even more compelling than they were back in 2011. This means that 2026 could be the stage for the next epic chapter in silver's story, especially if industrial demand continues its relentless climb and investment pressure refuses to ease up. And we can't forget the influence of global events. Things like inflation fears, fluctuations in the value of the US dollar, and geopolitical tensions all have a major impact on precious metals. When uncertainty is on the rise, investors instinctively flock to silver as a safe haven asset. Even a relatively small global shock, whether it's a financial crisis, a new conflict, or a political surprise, could trigger a sudden wave of buying pressure, causing sharp and dramatic price movements. Here's what might be the single biggest driver of all. Silver is absolutely essential for some of the fastest growing and most critical industries on the planet. Let's talk about solar energy for a moment. The amount of silver required to meet the world's green energy goals is staggering. Some estimates suggest that the solar industry alone could consume more silver in the next 5 years than many large mines produce in a year. Then you have electric vehicles, 5G infrastructure, AI server farms, and advanced medical technology. All of these sectors need silver, and their demand isn't just growing, it's accelerating. This isn't a temporary trend. It's a long-term structural shift in the global economy. Finally, we have to consider the power of investor psychology. One of the most powerful forces in any market is the fear of missing out, or FOMO. When retail and institutional investors see silver starting to trend upward, they rush in to buy, hoping to catch the wave. This flood of new money creates its own momentum, pushing prices even higher. When you combine this psychological driver with an already fundamentally tight supply, a sudden and dramatic price spike becomes not just possible, but highly probable, whether the underlying fundamentals fully justify it at that moment or not. So, we've covered the current price, the booming industrial demand, the intense investment pressure, historical precedents, and the impact of global factors. We've laid out the bullish case and the skeptical counterarguments. Now, let's get into the nitty-gritty. What is the realistic path for silver to actually reach $100 an ounce? What are the key milestones we would need to see along the way? More importantly, what are the biggest risks that could stop this rally in its tracks? And what does all of this mean for you, whether you're a seasoned investor or just someone curious about the future of money? Let's map it out. For silver to reach $100, we would likely see a series of escalating steps. First, we need to see silver decisively break through its previous all-time high of around $87. That would be a huge psychological victory, attracting a wave of new media attention and investor interest. From there, the next major hurdle would be the $90 mark. If industrial demand continues to outpace supply and investment inflows remain strong, hitting this level by 2026 is a real possibility. This ascent wouldn't be a straight line up. There would be sharp pullbacks and periods of consolidation along the way. But the key would be sustained industrial buying, especially from the green energy and tech sectors. We would also need to see continued evidence of a physical supply squeeze, with reports of delivery delays and rising premiums for physical silver bars and coins. If these conditions hold, the final push from $90 to $100 could happen surprisingly fast, driven by a speculative frenzy as the mainstream public finally catches on. But what could go wrong? The biggest threat is a severe global recession. A major economic downturn would hit industrial demand hard, potentially cutting the legs out from under the rally. Another risk is a sudden shift in central bank policy. If inflation is brought under control faster than expected, and central banks begin cutting interest rates aggressively, the appeal of safe haven assets like silver could diminish. There's also the possibility of a major new silver discovery or a technological breakthrough in recycling that significantly increases supply, although most experts view this as a low probability. If you're considering getting into silver, it's crucial to do your own research and understand your own risk tolerance. For some, it might be a long-term hedge against inflation. For others, it might be a more speculative play on the green energy transition. Either way, the journey of silver over the next few years is shaping up to be one of the most exciting stories in the financial world. Whether it hits $100 or not, the forces driving it are undeniable. So, what do you think? Could silver reach $100 in 2026, or will the risks hold it back? Comment your prediction below. I want to see what the community thinks. And if you found this breakdown helpful, hit that like button and subscribe for more updates on silver, gold, and the future of money. Thanks so much for watching The Silver Thesis. I hope this breakdown gave you a clearer picture of the forces shaping silver's future. from industrial demand to investment trends to everything in between. Remember, knowledge is your best investment, and staying informed is the key to making smart decisions in today's fast-moving market. Keep learning, stay curious, and I'll see you in the next video for even more insights into silver, gold, and the world of precious metals.